Hey guys, Jason here, and hey, in my last video we touched on how our property portfolio, if we built it in a way with positive cash flow properties, could be debt-free within a period of time and have a great positive cash flow or a passive cash flow for you to retire on or quit your job or whatever. But today I want to talk to you about our property portfolio that might be a bit different. It might be a growth portfolio. One where if you already got a great income from your job or your career or your business, you're happy with the income that you have, but you want to have some growth properties in your portfolio for value and growth over time. I'm going to go through today how that might work and where we could arrive at a situation where we could debt reduce or debt eliminate your property portfolio as a property investor. So let's have a look at it again. Usually the way we start out was with our PPR or having some equity or cash from somewhere, and then we're looking at purchasing an investment portfolio. Here we've got three good quality capital growth properties, some blue chip properties, and we've got a little positive cash flow property just to top it up a little bit. It's going to take about $350K to purchase this investment portfolio, and what we're looking at here is these properties with their rents at about a 5% rental yield, and this one about a 6 or 7 depending if we're short term letting it, are going to be positive cash flow after tax from your income. So your dollars that you're declaring as a career or your job or your business. So we're going to use the tax deductions in your income plus the rents and the deductions you can get from your property portfolio to generate the income and take care of itself here. So it's a positive cash flow after tax portfolio, and let's have a look how this might work over time. We own these properties, let's say, a good period of time to plan to own a bit of real estate is 15 years. If you're not willing to go the distance with real estate, then don't do it. It is a medium to long-term investment vehicle, and you've got to be able to hang on for that period of time. So let's say we've got 5% growth compounding over this 15-year period with our portfolio of properties, which includes our PPR, okay? That's $3 million worth of real estate all up, and then we have a look at the growth that might occur. Let's say we had a $3 million portfolio here. Down this end of town, in 15 years, that's going to be worth $6 million. So that's a nice chunk of equity growth, and the difference between our debt and what the properties are worth is pretty significant. So one way to exit or now turn your property portfolio into positive cash flow for you, there's two ways we can do this. One, we can just keep the portfolio and hope it goes up in value and hope the rents have now created some sort of positive cash flow. That will take a little bit more time for most people. The other way we can do this is an exit strategy at the end where we might choose to sell some of the properties here and then reduce some debt, okay? Let's say we did that. Let's say we chose to sell a combination of these properties and we paid some taxes. We could eliminate some debt. You might do your PPR because it's capital gains tax free, or you might choose investment properties, but who knows? Let's say we choose two of these properties here. That pays out the rest of the debts here, and we are debt free. Let's say we sold half, kept half. We'd end up with at least $2 million worth of debt-free real estate at the end here. $2 million at a 5% rental yield gives you $100,000 passive income. So guys, that's just a basic understanding of how to structure a property portfolio, how to understand what and how we might exit and debt reduce. Remember, getting rid of debt is important at some point, and turn now property portfolio into a passive income machine. Hey, listen, we go through this stuff in detail at our property investment nights. So if you want to learn more about this, how to build a growth portfolio, how to build a cash flow portfolio, a balance of both, then come along and check it out and see what we've got to say. Until we see you in person or catch up at one of our property information nights, take care. Bye for now.